Hey everyone, so after listening to feedback over the past couple months, we decided to change our video around just a little bit. We'll still be recapping and highlighting the biggest news stories from the market over the past week, but we're going to be doing more of a forward outlook, trying to educate you on what could be moving the markets moving forward, and the news stories that you should be watching out for. Hope you enjoy, and if you like the new content and the new format of the video, make sure you hit the subscribe button and also follow us on Facebook.
The S&P 500 this week saw one of the worst days over the past few weeks on last Tuesday, as the S&P was down just over 3% just in that one day. But for the week last week, there was a little rebound on Wednesday and Friday last week. But still, the S&P 500 down about 1.3% just last week. Dow Jones was down about 2%. And compared to those two, the NASDAQ held up pretty well, almost flat, down about 0.2%. And the only green U.S. index that we track here was the Russell 2000 last week. And the Russell 2000 has been an outlier, not only this year, but last year as well, as it's now year to date down 26%, where the NASDAQ and technology sector, the technology stocks are down just about 4% for the year. So good news last week, just out of the Russell, that we saw a positive week. We're out of the Dow Jones and the S&P, as I said, down about 1.3 and 1.9 respectively. And now the S&P 500 is down a little over 12% for the year, and the Dow Jones down about 17. As I said, NASDAQ being pretty close to positive, down just about 4% for the year, and the Russell 2000 down 26. Foreign and emerging market stocks were also down last week. Foreign market stocks were down about 1%, while emerging markets down 1.85%. Now, both foreign and emerging market stocks are down just over 20% now for the year. And they've been pretty close to the same here since we've started tracking these foreign and emerging market returns since the beginning of the year.
Good morning, everybody. Mike Tedeschi, Wealth Management Advisor. This week, we're going to take a look at two different charts. We're going to take a look at a chart of oil, and then we're also going to take a look at the Dow Jones Transports. First, let's take a look at oil. As we talked about in last week's video, the May contract for oil, when we put together last week's video, was trading around $12, which was as low as it had been in about 20 years. By the end of the day, last Monday, oil actually went to negative $40 a barrel, meaning buyers were paid $40 a barrel to take oil. The reason this happened is because storage ran out, and anybody that was going to take delivery of oil contract for May didn't have anywhere to put it, and we all of a sudden ended up in a bidless market, meaning there was no buyers. Literally until we kind of fell down into that negative $40 a barrel range. Now, the contract for June, I want to take a look at this again, and we'll back this out and look at it on a monthly basis. Last week actually went to $6.50, which is the lowest price that we have seen in 40 years. Right now, oil is trading at that $12 level. And if we put on our chart that really, really important long-term support, which we saw back in 86 tested as well as in 98, that's right there at about that 1050. The problem with the oversupply of oil has not gone away, and there is still potential for this contract to fall underneath of that level and continue to head lower. Now, one of the interesting things when we take a look at the price of oil, we can actually see the future prices for all of the different contracts. I've pulled that information up on the chart for you, and we can see going out to October, it's still trading in the low 20s, and we don't get $30 oil until we get out to May of 2021. With prices this depressed, almost every single producer in the world is losing money at this price point. This is a huge issue for the oil and gas industry globally, And seeing as how America is the energy leader and have been here over the last few years, this dramatically impacts a major section of our economy. And this is going to continue to be something that we need to pay very close attention to, because this certainly could have a spillover effect into regional banks, all the way down to Main Street. Well, let's continue to pay attention to this moving forward. The next chart I want to take a look at in today's video is of the Dow Jones Transportation Index. Now, when we talk about the transports are moving goods throughout the economy. It's something that a lot of people pay attention to as a barometer of health of the overall economy. Now, when we talked last week, the NASDAQ 100 was actually green for the year. So we are seeing leadership out of the NASDAQ, but underneath of the surface, what's really going on with the actual economy in itself? Well, the transports are actually below the 2018 lows, and we have been under that since early March and have not made our bounce back up above that level. With so many companies reporting earnings this week, as well as the Fed rate decision, we really want to pay very close attention to what's going on underneath of the surface. And that key level to watch for that Dow Jones Transportation Index is, can we get back up over that 8640 level, the 2018 lows? If we do, then perhaps the NASDAQ is giving us that leading indicator and we will continue to head higher. If we're unable to get back up above that line, perhaps what's going on underneath the surface is really telling the real picture. And those couple of companies in the NASDAQ that make up the lion's share of the gains are the outliers. So we're going to continue to pay attention to this, because what happens in this chart is very important moving forward. Thank you, guys.
Last week, additional funding was approved for the PPP loan program. $484 billion was signed to help replenish the funds that ran out just a couple days after the program was opened. Now, it's also being rumored that there are tens of thousands of applications that still have not been processed yet. And talks in Washington are turning towards not tying a number to this program and making it an unlimited amount of money so that anybody that needs a PPP loan can actually get one. Hopefully this news can help companies have the confidence to keep their employees on their payroll, and we can start to see the unemployment numbers drop, as we saw an additional 4.4 million people file for unemployment last week. In our opinion, the biggest news story that we have to look forward to this week is the Fed meeting on April 28th and 29th. Now, the Fed's been quiet for 2 weeks as they entered their blackout period that they have before live meetings. Two of the things that we're going to be focusing on going forward with this meeting is that, one, what are they going to do with interest rates? Could we actually see negative interest rates in the United States for the first time ever? And the second thing is we're going to be focused on what are they doing with their balance sheet, as they announce that they're going to start buying individual corporate bonds as well as bond ETFs. With the 10-year Treasury sitting right around 0.6%, we could actually see the 10-year Treasury yield 0% over the next couple months if they continue to purchase all of these different bond ETFs and also drop interest rates. There are a couple other things that you should pay attention to from the weeks ahead. One is earnings. Now, this week ahead, we have 33% of the S&P 500 reporting their first quarter's earnings. And second, we have the phase 1 of reopening the country starting this week, as we have 8 states that are either fully reopening or are at least entering phase 1 of the process. So hopefully, with the coronavirus information that we had come out over the weekend, with reductions in both deaths and hospitalizations, as well as the antibody tests out of LA and New York City, which, if those antibody tests prove to be accurate, we could be looking at a drastically lower death rate than what we're looking at right now, which would also eliminate the fear of reopening the country and seeing a second wave of coronavirus coming into the fall and also into flu season. Thanks for watching. I hope you like the new format, and make sure you subscribe to our channel.